Fresh from last week's shock unemployment figures, there was more bad news for workers today, with wage growth stuck at a record low. Earnings rose just 2.5% in the year to June, so after adjusting for inflation, real wages went backwards. Despite the gloomy job market, consumer sentiment edged higher this month as shoppers recover from the post-budget blues. Neil Woolridge reports.
For Australian workers, it's life in the slow lane. Official figures show wages grew just 2.6% in the year to June, the weakest reading in the 16-year history of the series. After adjusting for inflation, that means real wages went backwards last financial year.
The domestic part of the economy is growing at about 1%, unemployment's going up. People don't feel like it's a great time to be asking for pay rises, and employers are not giving them.
The wage figures come after last week's unexpected jump in the unemployment rate to 6.4%. While that was partly affected by definitional changes, the evidence is mounting that Australia's labour market is stuck in the doldrums. In the wage price index for June, only teachers beat the inflation rate of 3%. Workers in utilities and recreation held their ground in real terms, while those in professional services and hospitality fared worst.
What it will emphasise for the RBA is that domestic inflationary pressures, which are really about wage pressures, are very benign. And so from a policy point of view, it may encourage them that they perhaps have a little bit more scope for policy to provide more stimulus.
The Australian Chamber of Commerce and Industry, which has long campaigned against wage claims, now argues the record low wage growth demonstrates the need for workplace changes. It wants the opposition and minority senators to stop frustrating reform, a view shared by ANZ boss Mike Smith.
This government had a clear mandate from the Australian people, and they should be allowed to govern, frankly. And, you know, these characters who get in the way are not doing the national interest any good.
Still, the National Australia Bank's monthly business survey shows trading and profits are improving. However, NAB's chief economist Alan Oster says firms are reluctant to hire.
What they do is they essentially use some of their unused capacity utilisation, but they don't invest. So it's really a business and a consumer out there that are still pretty scared.
Notwithstanding the bad news on jobs, consumers are shaking off the budget blues. The Westpac Melbourne Institute Index of Consumer Sentiment rose by nearly 4% in the August survey, although it remains just below the long-term average.
August saw the repeal of the carbon tax, plus the standoff in the Senate seems to have encouraged consumers that some of the more unpopular aspects of the budget may get modified. That seems to have contributed to the lift in sentiment.
But Matthew Hassan says pessimists still outnumber optimists, and sentiment is nowhere near the levels it was straight after last September's federal election.
Basically, we've come full circle from the pre-budget levels. We fell heavily in May, and we've clawed back to be just 1% below the level we saw in April.
Consumers accentuating the positive despite their shrinking pay packets.